cut. Keep in mind, it's the first rate cut that we've had in 4 years.
Well, we'll kind of get into that. I didn't even think about it in that aspect, Alex. But welcome everyone tonight. Tonight we're going to be talking about the Bank Canada decision that was announced yesterday.
Yeah. The first time, like I mentioned, that they decreased rates in 4 years. So, the last year has been pretty much steady state, like not many changes. But yeah, we're hoping to have an interactive conversation here and back and forth about kind of what this can be an indication of. That's just a little bit about myself. I'm a realtor, Freemax Combos Plus in Toronto. There's a QR code there with my contact information and social media, and I've been a real estate investor since 2013. Carmelo, you can continue if you'd like.
Yep. Hello, everyone. My name is Carmelo Buttice. I'm a mortgage agent at yourmortgageyourway.ca. I've been doing mortgages for over 20 years, and I've seen a lot of, interest rate changes over the 20 years because it is a cycle. So really, again, tonight we're going to talk about the Bank of Canada. And yesterday at 10 o'clock,
interest rates when you started in the industry?
Good question. I remember I was working for an alternative lender. I was working for household finance, and I was doing first mortgages at 8-9%.
8.9?
8 to 9%.
8 to 9%. And this was when, like early 2000s?
This was 2001.
Okay. And what were people? I mean, I understand that housing prices were a lot different back then. But was that because I know that I think in the 90s, like early 90s, interest rates were like at 15 and 20%.
Well, let's talk now. Let's talk about yesterday's decision, and we can talk a little bit more about the past, right? Now this was me yesterday. Like I was in front of the computer at 10 o'clock. News came out and was like excited for joy. Bank Canada cut rates. Yes, I was Alex. It was amazing how like all chat groups were blowing up. It was kind of like I personally didn't think they were going to lower it yesterday. I thought they were going to wait till July.
I know you owe coffee. So on the 15th, we're doing our first in-person meetup. It's going to be a walk in Downsview Park, and we're going to provide coffee. And coffee's on Carmelo because they reduced the interest rates.
I'm more than happy to pay for everyone. This is the first time I'm like so excited. I was wrong. Now the cool thing is the Bank Canada cut rates, and they signaled more to come. That's what I found interesting, Alex.
How did they signal that? Like, did they flat out say that? Is it between the lines or what?
Well, it's reading between the lines. Like, so let's kind of take a look like from the last 3 years, right? You can see in the last 3 years again. Maybe next time, Alex, I'll do the 5-year chart, right? Because you're right. It's been years since rates went down, and since the 2023, I remember is just rates going up, and up, and it seemed like it was going up forever.
Mm-hmm.
Now, in the grand scheme of things, that rate cut compared to where we were is not that much. Now, the one thing it does do, it's the signal that rates are going to go in a different direction versus up.
Yeah, like I mean, I think that it's every market has cycles, right?
Yes,
and that's kind of my takeaway from it too, right? Is that like the fact that they actually cut rates for the first time in 4 years, and actually for the first time in over a year did something, because they've been just making no changes, and they've also been bringing in or talking or rumoring about different types of laws around capital gains and different things to try to kind of cool the market through policy or keep the market from going. I don't know what the government thinks is going to happen, but this kind of just indicates to me that we're at the start of a new cycle. Now, how quickly are they going to be bringing down rates? That's something to, really, think about. And I don't know if anybody has a real answer for that.
Yeah, I'm kind of curious with everyone here. What are your thoughts with regards to how the change? Are you happy for it? Do you think it was a good thing, bad thing? If you want to just raise your hand or put a comment, you're happy for it or not. Again, in the grand scheme of things, it's 0.25%, but it's the fact that it went down versus up. or is better yet, waiting until July 24th.
Yeah. So Tommy has a question. So they raise their hand. Tommy, go ahead. You can unmute yourself or type.
Can you hear me?
Yes.
Yep.
Now, see, like right now, my concern isn't, or my feeling isn't so much immediate what just happened. What I'm curious about is, what do you foresee will happen a year or 6 months, a year down the road from here? Like, the reason why I said no, that I'm not pleased with the government lowering this, is I think we're heading into hyperinflation, but because of the actions of the government and where the economy is heading right now.
Well, again, where we're going to go is it's kind of hard to gauge. I'm going to show some charts with regards to some directions. The next thing is really the change with the Bank Canada impacts those that are in a variable rate mortgage or have a line of credit on their mortgage or just a regular line of credit. It also impacts savers, right? That change the Bank Canada makes, it impacts those who are looking to get GICs, all those high interest tax-free savings accounts. Those rates are going to also come down. So for borrowers are happy, for savers are not. Now the next chart is the 5-year Canadian bond yield. So and the reason why I'm showing this chart is because it impacts those who are looking at borrowing money for 5 years like a mortgage. And you can see just in the last few days, there's been a sharp drop in it. So the banks will be, should be offering lower mortgage rates. So I look at the bond yield as kind of like an indicator with the direction where for the banks when they're going to be increasing or lowering their mortgage rates. We're not as low as we were back at the beginning of the year. However, again, the Bank Canada surprised. This surprised me. I'll say this surprised me yesterday. Bond yields are coming down. In the short term, there's momentum of rates coming down.
Right.
Long term, again, hyperinflation. I'm more concerned about something, and Alex, I don't know if you let me know, Tommy, if you want to. I can make a webinar about it. Is the economy in stagflation? Because if we still have inflation,
right. Well, stagflation is even worse than a hyperinflation.
Yes,
well, it's a mixture of depression and hyperinflation at the same time.
Yes. So stagflation, for those who don't know, it's there's the economy, there's inflation in the economy, but the economy has no growth or is declining, getting smaller. So, but that is, they lowered, the Bank Canada lowered that prime rate because they saw inflation levels. Now, like again, this is what happened immediately. Like the question of what's going to happen next. I think that's what you're asking.
Right.
It's going to be slow and steady.
You think?
Yes. And listen to the Bank of Canada. Like this is the inflation numbers for the past year, right? We're not out of the woods. We still, like you said, we still have high inflation.
Well, that's if they're honest about how they're measuring CPI right now.
Well, this is where I always find there's a difference between how the government measures it and my wallet when I pay my gas, my groceries. Exactly. So exactly. I agree with you there. Like the cost of the television, say, coming down in price means nothing to me.
Right.
Right. But the way they look at it in a basket, and it's for all across Canada. Right. So it's not like it's for like one sector and the other, and they do factor in the different times of the year, the different seasons. So the good news is what's going to happen is if the trends, continue comes down, because it's not like it's a straight line down. We have last year it was a 4.4, 3.4, 2.8, then it bounced up. And it's going down, it's bounced up, and it's going down and had a little bounce. Like if we could continue this trend, it's a good thing when it comes to interest rates and the borrowers. Then interest rates come down, because if inflation coming down, it means less people are chasing the same goods. Now, and then, I think you have a comment? Sorry.
No, I just had a question. Correct me if I'm wrong. Bank of Canada usually only lower interest rate when the economy is going to a recession or hard times. So here on the one hand, the government mainstream media is saying we're heading into a soft landing or it's not, there's no recession. Then why are they lowering interest rate yesterday? Or why did they lower interest rate yesterday?
So yes. So again, the economy, statistically, we may not be in a recession, but look at this. These are unemployment numbers. These are people who've, were working, or a percentage of people in the labor force that are not working.
Right.
In the past year, it's gone up, and the Bank of Canada sees this has gone up. They see inflation coming down. There's less people working. The economy is slowing down. I'm sure they realize, statistically, we may not be in that recession, which I agree with you. But the reality is, if we never had all this immigration,
yep,
like the GDP per capita, I keep on reading and I keep on hearing is down. I'm trying to find where to get that data. So I would like to add that as a slide. I just don't know where to get that accurate data for that, to show for that.
Well, no, but then the measurement of GDP is inaccurate as well, because they're also including all the government spending and the stimulus into the GDP, which technically you shouldn't, to get an accurate GDP reading.
Well, gross domestic product is what the country produces, whether it's the government putting stimulus or the actual population doing it. So, it should be included in GDP, but I agree with you. There's a divergence. The Bank of Canada sees that there's tough times ahead. Inflation is getting cooled, but the feds are doing the opposite. They're on full throttle. Like, let's just spend.
Yeah. So, and again, it goes back to my original comment and concern. Like, they should be increasing interest rate instead of lowering it, if they want to cool the real estate market and help the economy. Now we may head towards hyperinflation as a result of all this.
So I just want to make sure I understand your question. You think they should raise rates solely just for the real estate sector and housing?
Not just housing, but overall trying to save the economy and fight inflation. Right now, not just the Bank of Canada, but all Western countries are facing the same issues. They're caught between a rock and a hard place. If they raise interest rates, then it's going to hurt the borrowers, like you said. But then if they lower interest rate, they're gonna kill their nation's currency. So it's damn if you do, damn if you don't right now. But that's why I'm asking you, like, what's the proper thing to do for the long term?
For the long term, it would be great if the two different, again, the Bank of Canada, they're a separate division where the feds are not allowed to really intervene with them. It would be nice if the feds recognize what's happening and not go through all the spending.
Right, of course.
Yeah. So the next year, I know we're going to have an election, and that's, hopefully, I'll be the first to say I'm looking for a change in government. Because again, the last, especially the last two, even just the last 2 years, the stimulus that was put in, 100% wasn't needed.
Yeah.
That did not show, to me, a sign of good leadership.
Well, he's buying votes. So,
trying to keep his job.
Yeah.
So again, it's what's going to happen. I think again, so when I listened to the Bank Canada meeting yesterday, he's making decisions on a month by month basis. A lot of reporters asked him questions, what's going to happen in July, and a lot of them try to even rephrase it. The consistent point was every meeting, they'd look at the data, what's changed, and make a decision point by point. If unemployment keeps on going up, if inflation cools down even more, because at 2.7, they're not exactly happy about that.
Yeah. Here, what's the proper thing to do if, let's say, unemployment is 25%?
25%?
Yes.
Well, 25%, we have much bigger problems.
Right. Because
we might have a revolution at that point.
Well, some people are saying our unemployment is probably around 20% at this point.
Where did that number come from? Like 20% seems so much higher than where we currently are.
Well, currently they're saying 6%, right? But I'm assuming we're all roughly the same age. So when we were growing up back in the 80s, how they measure unemployment or employment is if you're a full-time employee working 40 hours a week, that's when you're considered employed. And anything else, you're considered unemployed. But lately, I don't know when they changed this, but lately it's even if you only work 1 hour a week, you're considered employed now.
I don't know about 1 hour a week. I'm sure. I think they have minimums when it comes to part-time workers and part-time employment. That part-time employment might be included in those employment figures.
Right.
However, again, part-time. If you're working part-time, you are still working. Like again, think of it like a student just graduated university.
Well, exactly. That's my point. When we were kids, when you work part-time, you're not considered employed. But now, how they measure the stats is even if you work part-time, you're considered employed. You're not considered unemployed. And with the economy right now, people are working 2-3 jobs trying to pay the bills due to inflation. So that, like, I'm unclear as to what the proper procedure is if employment was measured properly, or how it used to be, it would be around 20%. So what's the proper procedure if unemployment is 20%?
So the textbook style, what should be happening is over the last 2 years, as inflation went up, the textbooks, and again, common sense should be monetary slow down in policy, like a restrictive policy, increase in interest rates, and a fiscal, federal, decrease in spending.
Right.
That's what, again, so does that answer your question? What should be done? Because that's what should be done.
But it's not, that's not what they're doing.
Well,
quite the opposite.
Well, one party doing the right thing, the other party is not.
Right.
So we have a chance next year to hopefully make a change.
So where do you see the real estate and the mortgage market heading?
Well, the real estate market, I consistently believe, is long term. Month by month, year by year, in my opinion, is just noise. Those looking to get into real estate or that are in real estate, if you look at any 10-year cycle, real estate in Canada, and especially the GTA, has always been higher 10 years from now. So that's where I see real estate going.
So you don't see a situation like what happened in Japan back in 1990?
Japan in 1990, I remember I studied it way back when I was in high school, so my memory and my knowledge of it is limited. It's been over 30 years. But again, Japan has a highly aged population, and they have very little immigration. and population declining.
Right.
Japan just recently raised their interest rates from negative for, I don't even remember how long their interest rates were at zero or at negative.
Right.
So I don't, I can't really comment too much about Japan's economy, but again, where they were in the 90s was not a good place.
So you don't, okay.
I don't think the Canadian economy is going to go towards the Japan economy because we have high immigration.
For now. But yeah, okay.
Good questions. Anyone else like to comment about what Tommy is asking, or what I think is going to be happening?
And that was really good back and forth. I really enjoyed that. My computer keeps freezing. My screen keeps freezing, but like that was yeah, and I think that it's immigration is what's kept us out of going into a recession. I'm not that versed in economics or these factors of it. All I know is that like on my end, all I'm seeing from after these Bank of Canada decreases is just like a lot of noise and like kind of social media posts and people talking about like how it's so great, but they're not like it's really quite minor. I think like the significance of it is that we're seeing their the Bank of Canada decision going in a different direction for the first time in 4 years. But where is it going to be a year from now? I think that they're going to slowly kind of gauge it and take it from there. But definitely we do have a good opportunity in the election if we want to make a change in government. I agree with you, Carmelo. I'm also looking forward to a change in government and change in policy, and just like a change in approach. But unfortunately, politicians, what's their job is to get elected.
That's now, Tom, again, in the short term, again, I won't be surprised if unemployment continues to creep up in the short term, right? Yeah. In the short term, again, because housing, both rental and mortgage payments, are a big factor in how we calculate inflation versus the U.S. Again, in the short term, I won't be surprised if inflation numbers come down. But again, this is where, again, statistically, like, again, there's what the Bank of Canada does, and then what's, like I said, like we agreed to, what you and I actually come pay out of our wallets every day.
Yeah.
Right. Mm-hmm. So there is clearly a divergence, but when they do the calculations, you can't really remove one portion of it. Like oil went down a few days ago and it went down as low as like $73 a barrel, and it bounced back up to 75. There's a lot of moving parts. So in the short term, I do see that if these things continue, meaning inflation coming down, I don't want unemployment to go up that much higher. Or 6.1, if it goes to 6.2, 6.3, I'm not happy about it. But that's just a sign for the Bank of Canada to then hopefully include more rate cuts. I don't want them to go back down fast. I don't expect, in the grand scheme of things, this 0.25%, it's just a good signal that rates aren't going to go up anymore, because there's a lot of people out there that it is hard, like you said, working 2 jobs, 3 jobs. We need lower payments.
Right.
Now, the grand scheme of things, I did some calculations for those that are, have like a line of credit, whether it's a mortgage line of credit or unsecured line of credit. For every $100,000 you borrow on that line of credit, 0.25% changes the interest by $20 a month for every 100,000. On the mortgage, it's a lot bigger. When you have like a unsecured line of credit for $10,000, it's $2. So it's not that much, but it's a monthly thing. On a mortgage payment, again, this is where it really depends on where you are in your amortization schedule. Per 100,000, your payments would decrease anywhere between, I think, $13 and up to $20. So again, it's on a monthly basis for every $100,000, depending where you are in your amortization schedule. So it's a small change considering where we're from, but at least it's a change in the right direction. We need some payments to come down.
I could disagree with you there.
I would like to hear why would you think the consumers or like mortgage holders or people who have like loans, lines of credits, car loans.
All right, here's like I'm looking at a bigger picture, not just from one particular party, but as a nation as a whole. If well, right now, the government and majority of households, the Canadian households, are in a debt trap. No matter how you slice and dice it, what is it? The national debt is $2.2 trillion, and household debt is nearly $3 trillion. So, yeah, I agree with you. Household would love to see interest rates come down so that people can afford grocery or the necessities in life. But at the same time, as we could see, like with this current government, they're irresponsible with the national budget or the national spending. So you lower interest rate, and which means they will print more money or spend more money. In essence, it will result in more inflation and the devaluing of our dollar or our purchasing power. So yeah, you know what? Even if interest rate comes down by 1%, but inflation is 10% now, and we're losing at a faster rate the purchasing power of our dollar. It's not going to help anyone in the long run. So that's why I'm just looking at the bigger picture as opposed to one aspect or one group of people, or if you trace back the problem or the ripple effects of one action, this is what you're going to get, and that's how I'm looking at things.
I agree with you on a lot of points. The debt levels are extremely high on both sides, consumer and government. We are definitely in a debt trap.
Right.
Now is that is that something for the government to solve? Because I think the government should leave the consumers to solve our problems and not have to help every single person. At the same time, the government.
No argument there.
At the same time, the government, their job is to also it's one thing for them to tell us as a nation, hey, to qualify for a mortgage, you got to do this. How you should be spending your money should be like this. Hey, Canadians, you need to be savers. Stop spending when they're overspending.
Right.
So that's where it's frustrating because those they're spending tax dollars where one form or another we're all going to be paying more taxes. Taxes is the biggest crime in the world.
I agree with you. And what is it? I just read a stats last month. 1 in 4 jobs out there are government jobs now. So there's our Canadian government is the biggest employer in the country.
Yes.
So how are we ever going to get a hold of reining in the overspending and get everything under control? And this goes back to what my comment about, I think unemployment rate is probably around 20% right now.
Again, I can understand why you come up with that 20%. The truth is, we really don't know.
Right.
But again, we could only make decisions on what we do know. We know that whether it's 6.1, whether it's exactly, whether it's the exact amount, I don't think is as important versus where the trend has been. The trend is up, and we all see it.
Yeah.
The cost. Again, I do feel prices are extremely high. But at the same time, I do feel that it's always been high. The inflation numbers for the past 20 years, when they've been saying we're at 2% or less, has been smoke and mirrors, because when I'm buying a gallon of orange juice for $6, $7, $8,
Yeah.
I remember I used to buy it for 2 liters for like $1.99, and sometimes on sale for $1.49 just a few years ago, right?
Right. Well,
So,
I don't know how many recessions you've seen or economic downturn you've seen in your career or in your lifetime, but have you ever seen our current market this so erratic? Like, as I recall, in the past, if there are one or two signs of uncertainty, you'll see a correction in the market right away. But now it's quite the opposite. We get all these warning signs, and yet the euphoria in the market is unbelievable.
would you think that's maybe because of social media and how fast media and news is released? Do you think that has an impact?
Perhaps. Yeah, I never thought of it like that. That could be one aspect. Another aspect is I feel like the general public is dumbed down drastically in the last couple of decades. Like,
yeah, people are not financially literate. There's a major challenge in financial education, and just the kind of culture that we have here in the West is spending, leveraging, buying at your max, not saving. You know, this is why we're in this situation. Like, you know, do you think that because there's inflation, people are going to stop buying new cars or going on vacations or maxing out their credit cards? Like, you know, it's on a much bigger level than one government. And just like, I mean, it feels like our entire economy is just based on an idea, like you know, like the market, the dollar. It's you know, it's not, you know, after they took it off the standard, it's just exactly, it's just like a theory, right? And as long as everybody buys into it, then it continues to spin. Right? Yeah. Like that's what it is. And we've all bought into it, and we bought into this lifestyle. And that's why, you know, like for my family immigrated here, and that's why immigrants continue to come to Canada, is because of that lifestyle. Then they have kind of like a bit of a rude awakening when they get here and realize that, you know, the government's not going to like really hold your hand, and, you know, you're kind of thrown in there. And, but yeah, it's just like, it's it's much bigger level. I don't think it's something that we're going to be able to change within our lifetime. I just think it's you know, like these like economic theories or things that, you know, maybe, you know, we learned like in economics class in university or college, like they're, you know, like it's just going to continuously change with the way that our society changes. I mean, that's just my 2 cents. I'm not as well versed in this stuff as you two guys are, but that's just like, that's my thing, and I'm going to shut up now.
Alex, again, no, you brought a lot of good points up, right? Because, you know, these things aren't going to be changing, and I think we all would agree that the financial literacy of our country really isn't up there.
People need to take their own financial well-being into their own hands, and not expect that pensions and, you know, unions or anything like that is going to support them.
By the way, I just want to thank both of you for your time. I don't mean to hog all your time or direct the course of this conversation.
I've enjoyed this conversation, Tommy, and Alex. If you could share, I don't know if you shared our handles. I would love to have another one-on-one with you afterwards.
Yeah, or if you want to come down to our in-person walk and talk that we're going to do at Downsview Park next Saturday. Like, I don't know if you're in the GTA, Tommy, or what part of the Toronto you're in, or what part of the country, but you know, for those that are here, we are going to be doing a walk and talk in Downsview Park. It's going to be on the 15th at 9 a.m. I believe. Is it 9 a.m., Carmelo, right?
Yeah, the walk. Yeah, but the walk begins at 9. If you can show up at 8:30, I'll be paying for the coffees. I'm going to buy, you know, some coffee for everyone, and
gourmet coffee, none of that Tim Hortons stuff. Hey, I don't want Tim Hortons.
Nope, Alex, no problem. I'll see if I'll find out if there's a Starbucks. I'll get Starbucks. No, I'm more than happy to pay. Race went down by a quarter.
Yeah, but Sorry. But like, as far as like housing affordability, one thing that I'm seeing is like, they're talking about, building new homes, that we have a shortage in homes, but the challenge is that when they build these new homes, they're so unaffordable. Like it's, like if you're, for example, if somebody's looking to buy a new condo, it's going to be $1,600 per square foot when somebody can buy a resale condo for $800 square foot. So I don't understand how, building new homes at these prices is going to really help anybody with any interest rates if there's, new homes are so unaffordable.
I think what we all need to do is start empowering ourselves and not rely. I personally don't rely on the government for anything.
Of course.
You know what I mean? Like I have a healthcare system with them, but I still have my own personal insurance, right?
So you two don't foresee a real estate crash at all?
Not like the United States, based on the information we have today.
Will this get people off the fence? You mean, David, do you mean like people that are waiting, they want to get into the market, but they're just kind of window shopping? I don't think a 0.25% interest rate cut is going to necessarily do that, but maybe for some. But we are also historically summer months, first 2 weeks of July, end of August. These are slow times in real estate. So I don't know if we're going to see anything significant now, but if they continue to bring the rates down, let's say they bring them down another quarter, another 0.5, or, like we're going to be at, at 4 or 4.25 in the next spring, then yeah, I think it's going to be a lot more aggressive than we saw this past spring.
Dave, to answer your question again, I think in 24 hours, there's going to be no change. The reality is that interest rate changes and impact the economy 12 to 18 months from now. But however, I also think I saw so much social media yesterday. And social media...
All from realtors.
Realtors there's a lot of people who are not in real estate. They're not even in investments. I see this, these influencers that, that they make these comments. And again, they're influenced. People are listening to them. So there may be some slight, it won't be, again, 0.25% in the grand scheme of things, considering where we were, where we are and what the change. But will it get buyers to come in? I think those that need to get into the market, or meaning they already own a home and need to buy something else, it may spur them because they're already in the market. They understand, and a bunch of them probably went through the bidding wars in the last few years. So those people may want to get ahead of that curve. In the short term, not much change. In the medium term, if rates come down a little bit more, and the more that I see more the bond yields and the fixed rates, then yes, I could definitely see, again, a little bit more buying. It won't be like the 2022 peaks when everything was like the FOMO.
So you don't see a crash at all then, in other words? In
real estate, it's supply and demand. The demand, the population is growing at an astronomical rate, which is demand, and supply. There's clearly a lot of constraint. That's just, for me, economics 101. Until one of those variables change significantly, I don't see any crash.
Okay.
I'm seeing a lot of multiple offer situations right now. Like I'm working with some buyers both in Durham region and in Peel region, and yesterday we put an offer on a house and got 12 offers. So but I mean, it was artificially created by the listing agent who listed it way too low to kind of stimulate that. But still, the price that it sold at was, a market price. There's no indication that market prices are going down. And, there seemed to be 12 people or 12 groups that were, interested at that time in purchasing that property. So like when you have, I think that if anything, unfortunately, because of the higher costs of new construction, the costs of resale are going to start to go up as well towards that until it's going to be fairly close. And that's what's going to make people buy new construction. Because like I see, new construction projects that are at, like I mentioned before, $1,500-$1,600 a square foot, when you can buy something for $800-$900 like on the same street in a resale building. But like people want to get into home ownership. They see it as security. They see inflation. They see that our dollar is, being printed and printed and printed, and they're seeing investing in real estate, whether it's for their own use or as an investment, as a way to leverage inflation and protect their money and grow wealth. So and a lot of that is just kind of, it's not even, fueled by lower interest rates. Like when we had like really low interest rates during COVID, what we saw is a lot of people got themselves into trouble because they over leveraged and thought that this was going to be, forever. And now they're selling off their portfolios, and there's people that bought pre-construction and they're willing to walk away from their deposit and assign that pre-construction. So put into perspective, they're walking away from a 20% deposit to the builder and selling at below what they paid originally, and people are still not buying that because resale is the more affordable option. But as resale goes up, then that's going to be going up as well. Carmelo, I see Carmelo posted a link in the chat if anybody wants to book a 15-minute call with us to kind of like talk one-on-one. Happy to do that. I don't know if you shared our socials there, Carmelo, or not.
Yep,
just
I did.
Was clicking like crazy. My Instagram handle, by the way, is not your Toronto agent anymore. It's just like first name and last name. So
okay. My apologies, Alex. If you want to write it in there.
Okay.
Again, we got some messages, some comments from HKL. I think lowering the rates helps those that are renewing, but if there's another drop in September, it might pop up a bit. Meaning, I'm assuming it means by popping up the buyers. He also commented, I don't think anyone likes a crashing scenario. A lot more people will be very, very unhappy, and they'll be complaining about prices just as much. Point. If we're complaining about prices going up, if prices go down, we'll be complaining just the same.
Yeah, for housing to become more affordable, people need to lose equity on their homes.
Well, I think for housing to be affordable, we need a stable market, not these drastic swings over the past decade. Because there's swings. I remember when I started my career, real estate going up 3 to 4, 5% was a normal thing. Now we're seeing years of 20% increase in prices, which is not normal. So I think we're pretty much. Anybody else like to put another comment or in the comment chat, or like to unmute themselves for another 5 more minutes before we end tonight?
And Kumar, I see your comment there as well, that you joined late when we were recording the up. We'll upload it onto YouTube, but also, I mean, this was a little bit of a off-the-cuff type of presentation, not our usual, PowerPoint followed by questions. So it was a lot more interactive of a conversation. So.
Right. Because I missed the juice that, because of the drop in the interest rate. What's your opinion, on that?
Carmelo, you want to do a quick overview?
A quick overview. The Bank of Canada, they're really going to be data dependent. They're going to look at it every meeting at a time. They're open to possible future decreases, but it's going to be specifically data dependent every meeting at a time.
Okay.
There's no clue what they're going to do in July. They'll make the decision in July, and same thing that goes out in September.
Yeah.
Are they meeting every quarter?
They have 8 meetings a year, which is technically like every 6 weeks. Not necessarily every month, but it's every 6 weeks.
Yeah, almost 1.5. Okay.
Yeah.
And if those are still here, again, we're doing a walk next Saturday. The walk begins at 9, and if you could arrive anywhere between 8:30 and 9, that'll be great at Downsview Park. We already have that post up on our meetup group. We would love to see a few people in person and get to talk one-on-one.
Yep.
We could talk about other things other than mortgages and real estate too.
Yeah, and it'll be it's like an easy walk, right? Like you want to bring your dog, bring the family, whatever. You want to join halfway through. You want to bail after 20 minutes. Like it's super casual. We just it's the first time that we're doing an in-person meetup, so we wanted to just kind of keep it very easy and not overthink it, and and not overcomplicate it. So there is a link It's actually an event that's posted in Meetup for Saturday the 15th. There's a link there for a map of the parking lot in Downsview Park where we're going to be meeting. We're going to meet around 8:30, and we're looking to start around 9. And hopefully we don't get rained out. If there's a rain day, then we'll do it the next day. But hopefully it doesn't rain.
And one last comment. Sorry,
Alex and Carmelo, I just wanted to thank you. Based on your last presentation, I've already called my bank, and I've moved from monthly to accelerated bi-weekly. Thank you for that.
Thank Carmelo.
Yeah,
you're very welcome.
Yeah,
I learned that from him too. So that's excellent. We're good. It's good to hear that you're implemented that, and you're going to get some good results, man.
Yeah,
it's so simple, right?
Yeah, it's so simple. Yeah, I even wanted to pay a little bit more, but the bank want me to do in 2 steps. First, go for accelerated bi-weekly, depending upon whatever their calculator tells, and then call them again if I want to bump it by a few more dollars. Yeah.
No, small, simple things.
Very smart thing to do. Thank you.
Yes.
Really appreciate it.
You're very welcome. I'm happy to hear that.
Yeah.
It's good to hear. It's good to...
Alex, one more message in the message box by HKL. He's learned a lot. He wrote, "I've learned a lot from you guys about buying and what to do with property investments. Very much appreciated what you guys have done. I started a bi-monthly from Carmelo too. Ha ha ha. Thank you again. Now you're saving. Thank you. I'm happy.